reason these companies need to raise money is because they are burning cash at an incredible rate. Sometime within the next couple of years, this thing is going to crash and burn on a scale that we have never seen before.
There doesn't seem to be anything that the AI is doing to see how it can become more efficient in that way in terms of resources. There's just this big money grab, this big hype about how it's going to make everything sort of better.
If you strip away the big companies that are involved in this boom, actually the stock market's not making that much money. It's not going up. There is so much money out there that it can kind of create new realities for a little while, but maybe not for very long. But for a while, it kind of can create these kind of alternative investment reality, these kind of alternative realities for investment. Right? This is the biggest bubble of an expansion of fictitious capital we've ever seen. And at what point is there an event that triggers where people go, whoa, hang on, I'm going to lose my money here, and they start pulling it out?
These agent AIs will be so good at doing the work for us. It'll be almost like everything is free because we can get rid of the workforce. All these robots will be able to pick iPhones off trees.
Shares are starting to win the discussion. And I think even a few months ago, that will be disproportionately centered in the US. Let's remember that. The US, I think, will crash.
Because the hype machine is running full steam ahead.
Kind of hypnotic narrative of we're in this race for AI, for instance. That's probably one of the most powerful parts of the vibe.
Hi Ben, welcome back. We just did a really cool episode on AI boom, AI doom, and there's some other stuff that kind of integrates with that as well, which is kind of like the AI hype or the AI vibe that's kind of going on at the moment. And it's got a lot of the sort of key sort of players in there. A lot of these wealthy technocrat individuals have, the richest men in the West or in the world, as we see, but they're still pushing really hard to try and raise funds to push this AI forward. And there are precursors to this in technology, which we can delve into later on as well. And we know how hype really kind of stimulates things. There's always this kind of narrative to kind of accelerate these things forward. And there seems to be lots of different echo chambers saying, well, this thing can do this thing can do that. And what's the reasoning behind the hype? Why are they trying to still raise so much money? And, where is all this manipulation coming from?
Yeah, so afternoon, good to be back. Maybe a couple of disclaimers. So first of all, none of this is meant to be financial advice in any way or form.
100%.
And we're not asking you, we're not advising you go out and short a bunch of stocks or anything like that. Of course we wouldn't. And then also, we're going to try not to have too many numbers in our conversation, but we will put some links and the numbers below, just so it doesn't kind of become too much to take in the numbers. So the first thing to point out is that this is the biggest investment boom ever, literally ever. So it's the biggest, in my view, speculative investment boom ever in history, and that's been pointed out by many people. The numbers there will put them beneath. This is the biggest investment boom in history, in terms of stock market valuation, the valuation of the companies, the ratios of the companies in terms of price to earnings, all those things. This is the biggest boom ever. So that's the first thing that's really important to point out. Second thing is this is essentially an American boom. So it's all, nearly most of it is all happening in one country, although there is a significant hub cluster in China as well. And that's actually reflected in the Chinese stock values increasingly as well. But the center is in the US, and that's where the big investments are happening. And nearly all those investments are happening, the real investments are happening in data centers, the physical investments. And then the stock market valuations just keep going up and up and up. And there are many people who are just looking at it and saying, well, hang on, this makes no sense, but it doesn't seem to make any difference. The market just keeps going up, and it seems like any argument is just an excuse for the market to climb further and for the valuations of these companies to climb further. You said, in the introduction, why are these companies still raising money? The reason these companies need to raise money is because they are burning cash at an incredible rate, all of them. So they are, on AI, they are all losing money, and I think it's really important to point that out straight away. So in terms of actual profit, they are all losing money massively, and again, on an unprecedented scale. But the confidence is there for now that people will keep buying into them, because it's all based on the idea that there will be these future earnings which will be exponential, right? And that depends on the narrative around, is the economy going to be completely transformed by this technology, and will they be able to monetize it in a massive way in the economy? So far, some of the companies are monetizing it, but nowhere near enough to actually be profitable. And the cost in terms of data centers, electricity usage, and chip usage outweigh the revenues, by order of magnitude for all of them.
Yeah, I mean, the way I see it, there's two narratives for this kind of hype and promise that they're trying to do to sort of like raise these funds. So one is at the kind of top C-suite level, or VC level rather, and the other one is at the grassroots level in terms of what the narrative is. So from my understanding, what I see, let's start with the grassroots narrative. The idea is that we will have all this AI. It's going to be super intelligent. It's going to make your life easier, a lot more wonderful. If you've got an IQ of, I don't know what standard IQ is, but if you've got an IQ of, say, 110, 120, 115, you can utilize these things. It will give you another 300 IQ. You can go out there and you can do all these wonderful things. It's going to make your life easier. You'll get your life back, gives you more time. That's one narrative, right, which is being sold to people on the grassroots level. And who wouldn't want their life to be easier? Because as humans, we always want to get to point B in the fastest way. The other narrative, which I see, which has been sold to the VCs, is, well, look, you've got this multi-billion or trillion-pound company. You're spending billions and billions on employees. You can just use our super intelligence to get rid of that, cut your costs, and you'll be more profitable. And obviously, the flip side of that is they're two very different narratives. While grassroots are thinking it's going to help them grow, it's kind of actually going to put them into a position where they're going to be made redundant. They're going to be losing their jobs, and we're kind of seeing that. But there's this kind of big hype to kind of push things forward, and it's still the main players. It's still the Elons. It's still the Peter Thiels. It's still the Sam Altmans. And we're seeing that. There's a lot of hands being sort of tied together in the background with sort of like the governments and the military. And like you say, it is a big kind of Western narrative, and that's probably kind of something that's being driven by, so-called democracy. But we're seeing this kind of way where they're sort of getting in and out of the markets, in and out of governments and stuff like that. So, I mean, where do you see things where they're at now? Because obviously with a lot of these hypes and promises, and as you mentioned with loss leaders, they need to get this money collectively fast. So they're saying this is on the horizon next 2 to 3 years, so we're going to hit these pivotal points where you've got this whole other echo chamber which is saying, no, we're decades away.
Yeah, I mean, my view, I want to be really straightforward about it. This whole thing is about to crash and burn. And I want to put it quite out there, and I could be wrong. If I'm wrong, I'm wrong. Sometime within the next couple of years, this thing is going to crash and burn on a scale that we have never seen before. There is a fundamental problem with companies not being profitable and not having a horizon for being profitable. And if you're basing everything on forward projections of revenue for companies that may never make money, that is a huge risk. And I personally believe it will crash, just like the first dot-com boom crashed. That doesn't mean it's all over, and some companies and individuals will emerge from that, still very, very wealthy. There will be winners, and also some use applications and technologies will survive, just like in what happened with dot-com boom. Some of those websites essentially were spurious and overvalued, and then there were some underlying technologies and companies that actually survived and grew. I think the same thing will happen with the so-called AI boom, the large language models. This model right now is completely unsustainable, and it will crash. And there's no chance for me that some of these companies will ever make money. And the valuations are so extreme that, I'm talking about things like 55 times price earnings ratios. We've never seen these valuations. And those valuations, you would literally have to be around for, hundreds of years as an investor to get your money back. And you'd have to have growth at such a phenomenal off-the-scale rate to ever make any money here. So that will crash, in my view. And I just want to be totally out there with that.
Yeah, and I think there's precursors to this in terms of history. And there are some sort of similar things, but not necessarily in the straight physical world. I mean, we can tie things into there are certain cryptocurrencies which are store of values, or which may or may not be good investments as we see them. There's also a lot of kind of meme or shit coins, all that kind of stuff, which Elon's played a part in with Doge and all that, and Doge coins and all that kind of stuff, and how they can manipulate markets may be something that he's utilising now as well. But we also saw, in parts of those cryptos, didn't really sort of crash. We just realised that a lot of those were kind of scams and rug pulling. But one area of the digital currency which was tied heavily into kind of crypto was NFTs, and those had massive valuations. And fundamentally, they were kind of JPEGs or these kind of little things which you could own, non-fungible tokens, and you can sort of find out about these things for yourself. But it's quite interesting kind of what you said, because there is that narrative has been played out before. There are a lot of these larger NFT companies who gave this promise. They were valued at extortionate valuations, and people were investing in them. And then when it got to a certain point, they realised that there was no utility. There was nothing there at the end of these for these companies. They didn't actually have a product. They were trying to claim that we're going to be doing these wonderful things, and then when it came to crunch day, they were like, actually, we don't have anything, and everything just suddenly bombed. So we're kind of seeing the repetition of that.
Yeah, this is the vibe investing, right?
Yeah.
So you create a vibe and you create a story, and as we've seen in this podcast, some of these Silicon Valley investors are uniquely good at doing that. They're really, really good at telling these stories, right? And that go all the way from Steve Jobs and Apple to now. They're just incredibly good at telling these stories, and they are very good at including people in their narrative into this kind of narrative bubble, right? And for me, that's what's happening. It's a vibe that's very powerful, and it's incredible how many people I know who just kind of, AI is going to be this thing, and it's going to do everything, and it's going to help everything, and they don't really know what they're talking about or what it's going to do, but they just kind of convinced it's a thing. And if you're on Instagram, social media, those things, all the time you just get this stuff, AI is going to do this, AI is going to do that. Practice is actually, the use cases are actually far more limited. So there's been loads of good stuff written. There is loads of good stuff just researching by experts and journalists what are the actual use cases, and they're fairly limited. And also people have made the point that the amount of companies built on top of the underlying models are relatively few. So I mean, I'd recommend, probably the best known person who's a skeptic is a guy called Gary Marcus. He's got a very popular Substack. He's on X. And he's a real expert. He's not just someone who's coming at us. And it's quite interesting because Gary Marcus is basically saying, hang on a second, look at these valuations. These people are losing money hand over foot. The AI is not doing what they say it's going to do. The use cases are quite limited. The productivity gains, companies are saying that the productivity gains of incorporating the AI up to now have been really limited. In fact, there's been big surveys by people like the Financial Times where they've looked at companies and they've said, how much is it improving your productivity? It seems to be very little so far for most companies, right? So he's saying, hang on a second, let's just keep some sense of reality. But then it's quite interesting. If you spend half an hour going through his Twitter feed, his X feed, there's all these people out there who are just going, no, you're just a boomer, you're old, you don't get this. This is just going to keep growing. And they're basically saying that we make our own reality. And there's this whole thing around vibe investing, right? And you remember there was that whole thing around meme stocks. Crypto's a bit the same, right? You just believe in crypto and you just kind of believe it's just going to get bigger, right? And it's a bit like that. So you remember there was that whole thing with the short selling on Robinhood and that kind of meme trading. And in a way, it was almost like these kind of investors could sort of change reality and make something that the GameStop short squeeze, that I was thinking of. And it's a bit like that with NFTs as well. So it's almost like just by the sheer weight of investment and belief, we can actually change the underlying reality. And I think there's something to that as well, because that's what we're seeing with the AI boom. I mean, this is actually some of this is actually going into real bricks and mortar investment, but it's all data centers, right? So it is kind of creating a reality. The question is that reality sustainable? And is it ever going to make any money?
Well, it's also who's in control of them, and especially the case study you've shown there with the GameStop. I think one of the things it did was actually highlight that the larger banks really are in control of the stock market because they was able to manipulate things in order to work for them, and put pressure on some of these organisations to shut certain things down. But the wording that we've chosen to talk about in this episode, vibe, is quite interesting because obviously it's a word that they use quite a lot within this field as well, even things like vibe coding and stuff, which is being very much put with this kind of agent AI. And, I've dabbled obviously for research purposes and otherwise to sort of see how this stuff works. And there's one particular company out there as well. There's quite a few of them actually, but they say, we've got these agent AIs, and you can build apps. You can build everything from it. You don't have to have hundreds of £1,000s investments. You just do put a simple text prompt in, and it'll give you what you want. And the idea is that as an entrepreneur, I don't need to go and hire 7 people to do this and invest loads of money. But what I actually find is, because my time is very precious, as is most people's, you find that once you've done the prompting, it's kind of really like managing 7 junior designers or 7 junior. You still have to go back in there and say, well, you've done this kind of slightly wrong. And look, you're doing your own thing over there. I didn't tell you to do that. I told you specifically to do this. Now I've got to spend 2 hours telling you to do this. And then you'll say, change this logo here. And then suddenly it redesigns everything again. So this stuff, like you say, isn't really where it needs to be. And it's like we talk about, you were talking about, these guys are boomers. They don't know where, people say, you don't know where it's kind of going. But I sometimes feel that those are the people that they are selling this to, these VCs, because they don't really understand what they're really investing in. They just don't want that kind of FOMO there. So it's the hype train is continuous, and they keep building up new narratives to do it, whether it's through, it's going to make your business more profitable. It's going to allow the strangest thing I heard recently is, again, from one of these guys whose software I use, which is like, look, the whole world is going to change. The whole economy is going to change. Right? Everyone is going to become an entrepreneur. You're going to be doing 7 things, 7 businesses, everyone's going to be, and it's going to be so wonderful. And the underlying things in the comments is like, not everybody wants to be an entrepreneur. Not everybody wants that life.
You've got to sell something to somebody else. And if the AI is doing everything, then who's gonna buy it? And if you've all got your own AIs that can do everything for you,
and eventually,
where's the productive economy in all that? So I do think it's fundamentally flawed. I always try and maybe I'm too old, but I try and always go back to the fundamentals. So I've worked as an analyst in the past, and I've worked also in financial markets, and I'm basically looking at the fundamentals. And the fundamentals to me are unsustainable, both of the individual companies and so on. And the only thing that could really unleash profitability here is if there was a massive boost in productivity, which then led to all these other kind of forms of wealth creation. But the evidence so far isn't showing that as happening, and there are some limited use cases that are working okay, but then there's many things that are not being adopted, or people can't see the use case for them. And there's thing about coding, I think you mentioned. So I've seen stats where very high amount of companies are trying to use the AI coding, but then a very small amount, only 20% of that code is actually being used. And a lot of that seems to be because of, like you said, having to go back and keep reworking and correcting it and reinforcing and retraining. And then some of that is because of security, which is a very important issue as well, because our digital economy is built on security and being able to transact digitally. Now, one of the people who's kind of more in the skeptic camp is the CEO of Signal, Meredith Whittaker, and she's been out there in heavy weight press like The Economist, trying to explain her caution about this. And her basic point is this, and she's talking about agentic, what they call agentic AI, right? Which is that the AI, as you said, is just going to go out there and manage your schedule, but also your bank account. It's going to buy things in your name. It's going to go out and do things for you and build your websites and transact, right? Not just the chatbot that's talking to you, but is actually going to go out and do things in the system. She says that the APIs are built on the principle that they are the gatekeepers for your data and your privacy. And so they may have complicated terms and conditions you may not read or whatever, but fundamentally the information has to stay within the legal remit of the API. For the agentic AI to work, you basically have to give it access to all the data. So all your own data, your bank account, your banking details, but also all the kind of underlying architecture of your operating system. So not the APIs, but everything that loads beneath it. And she says fundamentally that will not work and cannot work as we are at the moment. It's just going to lead to massive, fraud, insecurity, hacking, leak of, data, people harvesting your data, finding out everything, you don't want people to know about all your personal, life and data and everything you want to keep secure. And so she basically says, like, just hang on a second. Let's think very, very carefully about how, she's very reasonable. She's not, against the AI or anything. She's just basically saying, hang on a second, we need to be really, really careful about how we do this. And I think we're going to hit a wall with that stuff. I mean, most people would not be, I think, naive or reckless enough to give all their data, personal data, financial data, access to your credit cards, your bank accounts, and your schedule and your email to the AI at the moment.
Yeah, I mean, I've got some sort of viewpoints on that.
Or would they?
No, I think in some ways they would, because to a degree we'd sort of do it already with an element of trust. If you're, for example, in the Apple or the Android ecosystem, you're allowed to store your cards on the phone, all that details, and you're told that it's in a secure enclave and all that kind of stuff. We don't know. We're just putting that trust in. And I think there's a whole thing about this idea of this trust issue with AI, and I think they're infiltrating us in ways that we are not overly observant with yet. So I think in a previous episode you mentioned about how, algorithms, whether it's the search or the Google algorithm, feeds us what's the most, not necessarily the right answers, but maybe the most populist answers or the trending answers, right? So your first top 10 things may not necessarily be what you're searching for. Now, in the last year or two, we've seen that massively change, that the first top hit now is what AI recommends. So it's trying to build this kind of trust narrative between you and the user, and it'll be something like, okay, that's right. So I'll feel okay to kind of go down that way. So there's that side of it, and there's also the kind of cost efficiency side, as we see that they're kind of pushing more and more for data centers, which obviously has more pull on resources. Also, we've seen countries go to war over oil. I'm sure it won't be long. Hopefully it won't be. But before they go to war for things like water to help cool these data centers, there doesn't seem to be anything that the AI is doing to see how it can become more efficient in that way in terms of resources. There's just this big money grab, this big hype about how it's going to make everything sort of better, and I think a lot of people will give over their details because it becomes ease of use. The more barriers you take down for people, the easier it becomes. We've seen that in films like Her with Joaquin Phoenix and stuff like that, where, and we're seeing now as well where there are people who are marrying their AIs because the AI obviously knows you inside out better than your partner will, because it has all the information on you. And going back to the Empire of the AI book, that's what they want. They want people to feel that they can just give up everything. And if you're not giving up everything, then you're not on the same boat and you're going to be left behind.
Yeah, no, I get you. Maybe you're right. I mean, it's people will never cease to surprise me. The other thing that made me think when you were talking was maybe that trust just happens through like a few companies. And we've seen that, right, with iOS and the iPhone, right? So you kind of, and with Google. So instead of actually signing up to a site, you just sign up using your Google ID or your Apple ID. So maybe that's one thing, is that maybe a couple of those kind of top 5 companies kind of provide a kind of wrap. But then they've got the kind of black box with everything inside. It's one thing, going back to Meredith Whittaker, she with agentic AI, she says, look, it's this idea that somehow you're going to she calls it putting your brain in a jar. And then the agentic AI is just going to go out and find you a boyfriend or girlfriend. It's going to go out and plan your holidays. It's going to do your accounting and plan your bank account. She just says it's just not going to happen. And she says also we shouldn't want it to happen. It's just a ridiculous idea. It's almost like you're sitting over here somewhere with all your kind of digital self, and then this AI is just kind of going out and living your life for you. She just doesn't think that's the way to go, or it's possible. And she's pointing to fundamental flaws in the security that will create. And we have seen things already. For instance, some of the AIs, intimate conversations between you and your AI are showing up on Google searches, right? And again, I don't know. I mean, I'm sure that there are people who are reckless enough to do this, but I'm not one of them. And I know there's lots of people who don't particularly want all their financial details and life out on the web.
But then it's one of these things where I'll sort of mention this guy in a minute, but it's whether privacy really exists. So there's a guy that's he's been on sort of several sort of interviews, namely he's been on sort of things like Diary of CEO and stuff like that. The guy's name is Andrew Bustamante, and he's a former CIA agent, and he did this whole kind of infiltration with his wife, who was also ex-CIA. and it's worth watching. Whether they're plants or not, who knows? But the idea is that nothing is actually private. It's a falsehood that's put there to the consumer. And there's other journalists who've actually come out and actually said that, especially with things like cell phones, are actually ways for them to just scrape all your data quite quickly, which is actually quite a terrifying thing. But it's also, maybe it's naive of us to think that we don't. You were talking about us giving the credit cards to these agent AIs, all this kind of stuff. But there's also the fact that for the majority of us, our data's probably out there already on the dark web, already being sold off for fraudulent activities. So it's already out there.
Yeah, you're scaring me. You're scaring me.
But I mean,
no, but I know what
we've
you
both
mean.
been party to fraud on those kind of things already.
Yeah.
So.
But I think in the past, people kind of assumed that if you were some kind of state or government, you could probably find out stuff about you, right? And I think people have known that for a long time. And then I think increasingly over the last kind of couple of decades, people have been aware of the hacking, right? And the hack has just become a normal part of everyday life. But I think the implication here is that this will just break down another layer and just make it far, far less secure. That's certainly what Meredith Whittaker's saying, what other people are saying, and they're saying there's a kind of breach that or a kind of wall that we need to, a line that we kind of need to maintain to be safe. And she's basically saying once we break that down and you give kind of untrammeled access to the kind of underlying data and architecture, it's going to get really scary out there. So that's her view. But maybe we digress a little bit. I mean, maybe the big question here is, will it make any money for this podcast, right? And it's will it make any money? And even if people were prepared to give up privacy for ease of use or whatever, like you said, I mean, if everybody's running their own AIs and they think somehow that's the economy, I still don't see necessarily how that you're going to have an economy that's going to make any money. That's kind of long term. What's behind this? Because one of the things, and we'll put some of the graphics into the podcast and the links underneath. If you strip away the big companies that are involved in this boom, actually the stock market's not making that much money. It's not going up. So it's Magnificent Eight and everything. That's all the value or the upside. So the rest, if you strip them out of the indexes, nothing's happening. And that again, that for me is a really, really dangerous situation. And it's not the case in China, for instance. So the AI is super important in China, but it's not like a massive part of the economy. In the US, it's like that is the growth now. It is literally that. Nothing else is growing. So it makes them really, really taking a huge amount of risk there for investors, because it's literally concentrated on these big, eight companies, and there's a lot of things there which are really risky, which are driving valuation. So I mentioned just a couple of them. So you probably saw a little while ago the headlines that Larry Ellison became the richest man in the world, for a while. So he overtook Elon Musk, and then after a few weeks, Elon Musk overtook him again. But for a while, he was the world's richest man. And lots of people who are maybe not following it all the time were kind of like, hadn't heard of Larry Ellison as much as they had of the other kind of big tech barons. Because essentially it's Oracle, and they do kind of rather boring sounding kind of back office computer and software, right? For a while, he became the richest man in the world, and so there was a lot of press around him. And essentially, what it was that had driven their stock price up was that they'd signed a future deal for 300 billion of cloud services to OpenAI, and that had pushed their price up because they kind of incorporated that 300 billion into their revenue projections, and that had then driven up the share price. So this is a company that makes no money. OpenAI, in fact, is losing enormous amounts of money. We can come back to this maybe, but it's losing enormous amounts of money, promising in the future to pay another company 300 billion, and then that other company, their share price being driven up massively. So that's one example. The other is that Nvidia is one of the few companies in this whole ecosystem that's actually making real things. So Nvidia, in a way, is kind of the apex of this, because it's a real company making real chips, and they have they've really cornered the market in these advanced chips. And they in many areas they're the only ones out there, the only ones with the scale and the technology. So they're kind of at the top of this whole valuation, right? Because the the more you see the AI boom as getting bigger and bigger, the more you can project demand for NVIDIA chips. So their stock price, goes up accordingly. And so, recently they signed a deal, for instance, where they take 100 billion of OpenAI again, same company, for 100 billion in future chip sales to OpenAI. Again, to me, that doesn't sound good, right? It's a company basing its future revenues and future sales on the same company that's, its future customer, and which is losing huge amounts of money, and then they're taking parts of the stock, which is then obviously driving up the theoretical stock value of OpenAI, which, as we know, is still, at the time of recording this podcast, is still a non-profit in a weird way. So there's, we can point to many, many, many things like that at the moment within US capitalism, which is again essentially creating a vibe or a story. And in fact, I think the Financial Times in Lex, the investment column, they kind of said this is basically a kind of a market storytelling thing. It's about kind of showing, doesn't actually do anything, but it just kind of shows something, creates a vibe, right? And those kind of things, the more and the bigger that becomes within the market, I think the bigger risk you're creating of, because eventually, for me, the fundamentals will weigh in.
But I think it's also, I absolutely agree with you. I think it's also kind of looking at the root of things as well. I mean, we know the purpose or the origin of the idea of what a company is a formation to protect the individual and those individuals within it. So you can protect the assets of the company from the individual. But when we talk about these companies who are playing into this big kind of hype, it's the same individuals that we're looking at behind it, the Elons, the Samuel, and they're in so many different pies as well, So that, I think they're not really so much worried about those companies losing money, because they say they can sort of kind of cross-pollinate that wealth, and they can hype up one to make the other one sort of work. And I think we've never, when you look at like the traditional stock market, we've never had so many companies entwined in that way whatsoever. But now with, there's Magnificent 7 or 8 or whatever they are, you're seeing it's the same people controlling. There may be board of directors for 2 of those companies, or they may be, so it's that hype train can just keep going. And, these are all pals together.
Yeah, it's really interesting. And also, we talked, before about this. I think one of the episodes we did, it was called The Assault on Reality. I do feel sometimes I'm reading this stuff, and like I said, I've been in this world of financial analysis and journalism for a long, long time. I do feel like sometimes it's like an assault on reality. When I look at poor old Gary Marcus out there on X fighting his kind of good fight for the fundamentals, and he's just getting all these people going, nah, it's going to go to 5 times more, and this is going to happen. There's no reasoning, and he the guy actually takes time to respond to a lot of these people. He says, why are you saying this? There's no rhyme or reason to it, but it's working for them. And you mentioned Elon. I mean, Tesla, was a company that, it was a car company, had great products, grew. It was on the kind of cutting edge of the kind of EV revolution, and it was a really good story, right? And then grew tremendous value as a result of that. More recently, the headlines for Tesla have been more negative. So, the first thing is that the growth in their sales has slowed down massively. They're getting big competition from other car manufacturers, right, who are making EVs as good or better as they are on a bigger scale, right? And BYD and many other, and the traditional car makers who've started doing EVs and so on. And you get this situation where, a little while ago, the Tesla stock was something like 5 times the value of Toyota, and then Toyota's selling 5 times as many cars as Tesla, right? So there's this kind of, and that's vibe as well, right? It was about incredibly good storytelling by Elon around Tesla, right? And then you get a situation where actually, Tesla sales are slowing down, but what does Elon do? He doesn't say, oh no, this is a problem. He goes, well, actually Tesla's an AI company now, and we're going to do AI and robotics, and actually the value is all this data we've been collecting and our expertise, and it's working. At least in terms of the stock price, it's working. It's not working in terms of selling anything.
No.
And the sales are still he's still losing market share in real terms, and the sales are still slowing down. But in terms of the valuation, it's working.
Well, there was this old narrative which I've heard many sort of billionaires and VCs kind of point out, that they didn't view Tesla as a car company, and they viewed it as a data company. It was a data collection company because it was mapping the roads, and this was going to be stuff that would be able to kind of sell on, and that's why a lot of them were kind of sort of trying to invest into it. But again, we have, like you say, you have people who are able to change the narrative, people who own X, people who own Instagram, and it's if you go online now and it says, right, there is something actually going on at the moment. I'm not going to mention which particular crypto stock it is, but they're trying to make out that the government is, by I think the end of October, going to be sort of bringing this in, and it's going to sort of like, 100x and all this kind of stuff. It's another sort of kind of pump and dump sort of thing. And the way they're doing that is purely in the same way how these guys have open hype. They're just doing this marketing thing. So you've got like all these influencers saying, yeah, it's going to go to this, and you get bombarded with so much noise. You're like, well, of course, we've got to put at least 10 quid's worth in. If everyone puts 10 quid's worth in, another person put 100, another put 1,000. Yeah, and that drives up the value of these things, just for the people to then, Elon to do his own sort of rug pull, and then put that into whatever, whether he wants to go to Pluto next, or whatever it may be,
But yeah, and do you remember a period about kind of maybe 8 years ago when there was all those coin issues? You remember, ICOs, they used to call them.
Initial. Lots of scammers. It was very easy to set up.
And you could just go and go to Gibraltar and set up a company, do like a coin, and people would buy it. Same with NFTs, right? I guess the difference now is that this is A, on a much bigger scale, right? B, the actual companies are controlled by a really small group of people, right? And it's a bunch of very big companies now that control a huge part of the market valuation for the whole stock market. So it's kind of more concentrated on that way. But what's behind this? And I want to mention the book by Yanis Varoufakis, who's the former Greek finance minister, who was the finance minister do you remember when the whole kind of Grexit fight between Greece, when Greece went bankrupt, and there was the whole fight between Greece and the European Union, the Troika, and German government, who were the main debt holder and all that stuff. Do you remember when Greece was very poor and they couldn't pay everyone? So he was finance minister in the Syriza government, which was the kind of radical left government that was there at the time, and he's kind of intellectual economist, and he's stayed very much on the radical left. So he's a leftist. He's got his own kind of movement he's involved in. But really, a very interesting guy. So his last book was called Techno-Feudalism: What Killed Capitalism. I don't agree with all of it, and I don't think all of it's on the mark. But one thing he does describe very powerfully is just the massive expansion of credit. And he's got some metrics in the book, which are just, metrics which are out there. You can just read them in the economic data of central banks and IMF and whatever. But it's truly shocking. And his basic theory is that, or his description is that you had the financial crisis. You have to think back a little bit. That was kind of 2006, 2007, 2008. And then what did the governments do of the capitalist world? They massively expanded credit. And you remember all that stuff with kind of quantitative easing and all that stuff, right? So they essentially just put out an enormous amount of new money into the market in a particular kind of way that was designed to not stoke inflation too much. But they did it. And just a massive expansion of the money supply. And then we had COVID. You remember the pandemic. And again, what did governments do? There was going to be a huge contraction of the economy, so they just put out massive amounts of new money into the market, right? And his explanation essentially is that created an enormous asset bubble. So there's all this money out there that can't possibly find a productive home in actual real companies that are making real things and actually have decent price to earnings ratios. You've got decent kind of roads to profitability or making money already. So he's saying that's not there, and so then you just get this massive kind of boom of kind of people just investing in fictitious stuff, and that's everything from Bitcoin to NFTs to GameStop short squeeze to meme stocks. I mean, meme stocks. I mean, it's just literally people having a laugh, and you can actually now go out and trade meme stocks on a number of sites, and it's just people having a laugh. But there's money behind it, and some of these stocks go pretty high before someone does the rug pull.
Yeah.
So what does that say? It's like there's just all this money out there, and it's just kind of looking for a home. And I think that's kind of behind a little bit when I see Gary Marcus out there arguing with these kids about what's real and not real. The real point is that there is so much money out there that it can kind of create new realities for a little while, but maybe not for very long. But for a while, it kind of can create these kind of alternative investment reality, these kind of alternative realities for investment, right?
Well, it's kind of weird. I mean, I don't see so much difference between. You can argue this point with me. I don't see too much difference between cryptocurrencies and the markets that are out there at the moment, because they're all basically ledgers. We know that the physical money attributes of 3% of the world's money is only really physical. It's just numbers moving around. Same reason as if you try and go and get 20 grand out of your bank today, they'll refuse and say, look, you need 3 or 4 days, because they've got it tied up in stocks and markets. The money doesn't really exist there. And that goes back to the book that I mentioned, I think, in a previous episode, which is The Creature of Jekyll Island, which tells you about how the whole banking system kind of works. And all these things work off hype, even sort of like, the T-shirt that I may be wearing, it's telling me that I need that. So they're pushing that kind of hype model behind it. But it's just like, the things that I don't understand, or what I'm trying to get my head around, going back to the whole kind of AI stuff, and specifically people like Elon, is that they've amassed so much money that they are proclaimed the richest people in the world. There's no need for them to gain any more wealth. All right, and when we talk about stuff like how these agent AIs are going to make us all entrepreneurs, it's going to change the economy. Is that in order for an economy to work, somebody has to kind of suffer as a result for it to work. So if everyone's going to be all these successful entrepreneurs, AI is just going to be, like you say, just producing this slop of whatever products it is, because everyone's going to think they've got a great idea. AI is going around seeing everyone's creating the same, and I'll make it kind of like this. It's like, what is it really going to do? It's going to crash, like you say, because it's an if everyone is on, almost kind of comes as communism, but if everyone is basically at the same price point, creating the same thing, and nobody suffers, everything's going to crash. There is no market.
On a very simple level, it's like my AI getting up in the morning and sending your AI an email. I mean, is that producing
it's
any?
Weird.
Is it producing any actual value?
No.
But I mean, just on your point about money, and not to argue the toss, but it's. I mean, Karl Marx wrote about this. 100 years ago, and he saw essentially imbalances within capitalism, where capitalism kind of couldn't carry on growing, and one of the things he identified as the way that capitalism would keep growing. And Marx was actually really pragmatic compared to his successors, and he was massively into economics and studying what really was out there. Was this thing called fictitious capital, and in its most simple form, it's something like a letter of credit or a check or an overdraft. So you in order to keep the wheels of capitalism going, you just continually kind of expand the wheels. You just keep greasing the wheels by expanding the money supply. Of course, then there's a whole discussion with the economists on both sides around inflation and value, and very complex discussions about how it all works out. But I think the essential thing that I think is true to today, and even more so, is that fictitious capital just keeps expanding. And I think that's what makes me doubt a little bit, and why I don't often take very hard positions on this, because we're always living in a new world, and it's almost like capitalism continually reinventing itself with new things that we've never seen before. This is the biggest bubble of an expansion of fictitious capital we've ever seen over the last 20 years. That's the point that Varoufakis makes. And when you said that money systems were built on hype, I'd prefer to call that confidence.
Okay.
And I agree that actually Bitcoin and digital money is not massive qualitative difference, other than that one's got a limit. At least Bitcoin has with the blockchain, right? Whereas in fact the central banks can essentially expand money as much as they want, right? And other cryptos can keep inventing as many cryptos as you want. So there's no technical limit. The only real limit, what you called hype, is what I'd call confidence. And that's always been the way, right? So when a country, for instance, one particular country turns on the printing presses, other countries will start to devalue, will start to pay less for their currency. So you get a country like Argentina, because people don't believe in them, because of inflation and money printing, what happens is their currency will just depreciate. So essentially what's happened in world economics historically is that when you don't believe someone's story anymore, then then the things like bond prices, bond yields will go up and so on, and the currency will come under pressure, and that's how the monetary system has kind of reinforced itself, and that's why they had to go off the gold standard back then and so on, right? The question is now, where's the limit? And at what point is there an event that triggers where people go, whoa, hang on, I'm going to lose my money here, and they start pulling it out. So for instance, you remember back in earlier this year when that whole DeepSeek thing happened, that looked like it was a moment very, very threatening for some of these valuations of those companies, because it was like a moment where people went, hang on a second, you're spending all this money and they're doing it way cheaper, and it might be better than your thing, and they had to work very hard to shore up their narrative. And for a while it looked like, whoa, and I think there will be an event like that in the next couple of years, and it could be all kinds of things that could trigger it. It could be a new model comes out and it doesn't work, or it could be some terrible accident that is contributed by the AI, or it could be a series of lawsuits, or it could be some evidence showing that the growth is slowing down. It could be any number of things, but what I do think is that at some point that confidence will be challenged. We can't all just live in a vibe universe, and also we're not all investors as well. There's actually a real economy as well going on.
Yeah, well, I think there's a few things. I mean, the whole DeepSeek thing. I think there's a narrative now being pushed about from the West, which is saying the reason why that was so cheap is because they were just sort of monetizing the last run of it rather than the whole thing. Going back to sort of like the economy of things, it's like, yes, of course, these banks and stuff can keep printing money with the quantitative easing, but that has a negative effect as well in devaluation and inflation as well. Whereas you have assets like Bitcoin or gold, which have a finite amount, which keeps allegedly the value. The other issue I have is like other people who have come out of the works, people like Mo Godwat and stuff like that, who's the chief technology officer for AI for Google and has written several books now. One of the things, the world of the utopia that he sees in terms of like the AI moving forward is that these agent AIs would be so good at doing the work for us. It'll be almost like everything is free because we can get rid of the workforce. Have all these robots, we'll be able to pick iPhones off trees, more or less, kind of thing is the way he sees it. But if everything is free, then how does capitalism exist? Who's the buyer? Who's the seller? What are you selling? What do I need that I can't just get over here for free? And there's going to become a point, as we know, with like these loss leader things. I mean, there are some examples of loss leading companies that have worked before, things like Amazon and stuff like that, which was loss leading for sort of like 8 or 9 years before it actually started kind of making a profit. And the kind of the payment that you're making into AI at the moment, as we discussed, is your personal data. But what then happens once it has all that data, right? And these things become household names, as they are doing, like the ChatGPTs, and then the price walls, paywalls start kind of going up, and we've got to try and sort of like, it's just pivots to something else. It doesn't necessarily kind of leave it open, I don't think.
Yeah. Do you remember you talked about the Oculus and the VR and all that in one of the early episodes about the data and how they could trying to use that data to kind of understand your preferences and what you want and all this. But again, that's still all about selling things. And there's got to be a product that people are buying. And you remember we talked a little bit about this idea of enshittification. And it's a term that was coined by that guy Cory Doctorow. In fact, he's got a new book coming out any day now, which is also called Enshittification, where he kind of makes this argument, because it started out, I think, as an article he wrote, and he's now books coming out about it. And his basic point is your point that you just made, which is that so you capture all these people onto your platform, and you kind of give them a user experience. So like you get onto Facebook in the early days and you reconnect with family members and lost friends, and it's kind of great. It's like, whoa, it's nice. But then once you've captured those people, then the experience kind of starts to get worse because you then have to monetize it. You're effectively giving it away for free in the beginning. And then you start putting the prices up essentially and trying to find ways for people to pay for it. And then they may not be so keen on it because it may not be an essential. It might be something, okay, I didn't mind being on it. I do it all the time. I go on stuff, free version, but I like it, but I don't like it enough that I want to be on there forever or I want to pay for it, right? So with it's quite interesting at the moment. And again, going back to people like the analysts, and there's loads of good people out there who are looking at trying to look at the metrics. Don't forget, OpenAI is still a non-profit, so they don't have to declare proper financial numbers. So one of the big discussions that's going on about OpenAI at the moment is about the churn rate, with the churn rate being how long do people stay, and how do you show that, how many users you've got, and are they there monthly, weekly,
the
retention rate, all those things, right? And at the moment, the figures are kind of because they're not obliged to publish, financial figures. It's kind of cherry picked. So there's a lot of people trying to dig into it. And I guess the theory is, and I won't talk about any particular company, but all of them now need to put their prices up to their users. So there's two aspects to it, right? One is, actual individual users. So you've got to start paying. Some of them are like $200, $300 a month now. So that's going to change how many people are on it, right? And there's going to be fierce competition amongst those ones as well. You're not going to pay for all of them, right? You're not going to be wanting to pay 200 for Grok, 200 for OpenAI, for ChatGPT, another 200 for Claude, another. Do you know what I mean? You're not going to be doing all that. So that's one aspect of it. And again, that's a lot of that's to do with the user experience as well. Second aspect is that the API is built on top of the underlying systems. They charge them. So they have this kind of token pricing model. And apparently they're putting that up massively now. So a lot of those companies who've built companies on top of the models are going bankrupt.
Right.
And there's not that, it didn't create that amazing an ecosystem either. There's not like millions of companies who've done it, which again points to a kind of limited use case as well. So a lot of these people, it's not me saying it, go and look it up. There's a lot of stuff out there saying that now they start actually passing through the real costs, then the whole thing starts to kind of collapse on itself. And there is stuff, between the companies. So there's a lot of kind of agreements between the companies where one of them gets, cheaper, discounted cloud storage, but then that company has equity in the other company. So there's a lot of stuff where the actual real cost is not being factored in. And one of the things is the chips. So we think about it as a kind of upfront capex investment in the data center chips. But the chips actually burn out as well, right? So it's like fuel as well. So there's fuel in terms of power and water, and then there's also fuel in terms you have to keep buying the chips off NVIDIA, essentially. Some of the estimates out there, and again, it's not me saying it, look it up, is that companies are, typical big company, is for every dollar in revenue they're getting, they're losing $2.25. And that's
It's a big hit.
Is it going to get better? Because the whole future valuation is based on the fact that eventually you're going to be making so much money and you'll be able to put your prices up and monetize so much that then the ratio will change. And I think the OpenAI, from what people can see, they think they're going to be profitable in 2029 and they're going to lose 100 billion between now and then. So 100 billion losses to become profitable in 2029, but nobody knows if they'll be profitable in 2029. And they're not the only ones out there, right? So, yeah, it seems really, really risky, the whole thing.
It's worrying because it feels like sometimes it's opening up the floodgates to Zuckerberg's, his version of utopia, but our dystopia of this kind of Oculus VR world, which would then open the door again to things like NFTs, because you could be living in a trailer, put the headset on, feel like you're living in a mansion, but then the assets that you're buying may be like an artwork from $1 from somebody who's putting it into that. We've seen like, large big brand names trying to do that already, creating these sort of kind of virtual worlds, which will be absolutely horrific. But we could get to a point where people just don't want to live in this world that's going to be around us with the super intelligence or the hype or the collapsing of, because if everything collapses, what are we kind of left with?
Yeah, the thing is, I'm sort of thinking about how this is all going to play out. I mean, the thing is, somebody still has to buy stuff and make money. So if real wages are going down in the economy and people are unemployed, they're not going to be able to buy their virtual Gucci shirt or they're not going to have the funky new shirt for their avatar.
Yeah, which brings up the
Right.
question of, is this the fall of capitalism? Are we moving into a new model?
Yeah, I mean, my guess. I mean, yeah, my guess is it's going to crash and burn, but in a way that's happened. That happens, and that a lot of people will lose their money, and it will be probably more impactful than any other crash we've ever seen, just because the amount of capital tied up in very few companies and very few assets. So it's going to be pretty incredible when it happens in terms of the impact this is going to have. But then you've got to look at the real world impact on everywhere else. I mean, first of all, it's highly concentrated on some companies. Secondly, it's highly concentrated on kind of the people who've got the money to be able to speculate. Maybe the real world impact on actually making real things is more limited. There'll be plenty of other countries and people who just go on doing what they do. I mean, if the US AI crashes, what's that going to be like in Brazil? I mean, the Brazilians will just carry on doing what they're doing, won't they? Making what they make and enjoy. Is it?
Yes and yes and no. I mean, I won't go too deep into it, but you've also got the idea of going back to that. The companies themselves are protected, and the governments have a duty to keep certain companies go or to help that because they don't want massive unemployment. So as we've seen before in the past, you'll have large governments bailing out these large companies, and as a result, people in the grassroots suffer. Because the money's going there, not to where it should be going. So that's my biggest fear about things, because we tend to sort of repeat ourselves. It's just a new type of bubble. But as you say, what's even more fearful is this is the biggest one we've ever seen. And there are financial advisors or people who have got financial logs out there who are stating that, a big crash is coming.
I think the bears are starting to win the discussion. And I think even a few months ago that wasn't the case. I'm seeing more and more caution now in the financial newspapers and the analysts, and just more critical stuff coming out, and people trying to actually dig into the fundamentals. And that suggests to me that at some point there's some kind of event that precipitates a crash. But it will be disproportionately centered in the US. Let's remember that, because other countries' economies are based in different, all of them have got speculative investments, but they're not like that. And their weighting within the overall index is not as high as in the US. So the US, I think, will crash. And other things will emerge from that. But as it is right now, I don't think there's a way of making that model profitable. Again, I keep looking at the vibe idea. How long can you keep the vibe going, and what's channel? How much is there to channel into the speculative bubble? Because when nobody's left, that's when it crashes, right? When the money at the bottom is no longer coming in, right?
Well, I think as we sort of kind of finish up, I think there's two sort of concerns. So obviously we're looking at like the demographic of the States crashing, but there are a lot of companies outside of the States that they outsource to as well, which will take an impact initially and may rise from that. My other big worry is obviously, as you sort of mentioned, things like GameStop and Robinhood, and I'm not sort of suggesting people use these using trading platforms like Robinhood or anything like that, but it's so much easier for people to invest, and they see it as their kind of lottery tickets. And it's just tell people to sort of almost kind of be careful, because the hype machine is running full steam ahead, and don't invest what you can't afford to give away, basically, especially in these times when things are potentially going to go and crash and burn. And we talk about the hype model, and there's a reason why they don't call it sort of the Tech 7 or the Tech 8, they call it the Magnificent. The hype machine is already there with the terminologies they're using.
The hype machine is absolutely unprecedented, and people's kind of belief and willing to go along with it is unprecedented. And you've got all these people who are investing that weren't investing before as well, right? People wouldn't have had stocks and shares, at least in somewhere like the UK 20 years ago. It was very much a kind of elite who had that. And now there's like people betting on Bitcoin, and people on the train doing Forex trading on their phones. And, do you know what I mean? So all that's kind of grown. So there's more people in there on a smaller level. But I don't want to be callous about it, and I don't want to sort of pretend it won't have an impact. I agree with you, Simon. It will have an impact on many people and many areas of the economy. I don't want to be callous about it, and it won't be pretty. But maybe one positive is, don't. I mean, my advice would be don't go along with the vibe, because you got to think for yourself.
We never on zig zag. But
You've got to think for yourself, and also you've got to be. I would encourage people to be realistic about it. It's not like this, this kind of hypnotic narrative of we're in this race for AI, for instance. That's probably one of the most powerful parts of the vibe, is this idea that we're in a race, and it's like you ask people and you say, where are we in a race to exactly? What's the hurry? Where.
it's the human race, isn't it?
It's the
We're
human
always,
race.
we're always right. But I think one other fundamental thing that we kind of need to point out, which we've addressed in some earlier episodes, is that we don't base these episodes on anything that comes from AI. We base this on the R&D and the research that we do collectively through the books, what we're reading, and from kind of trusted sources. And we always do put the links to these books down in descriptions below. And we're going to actually be sort of like spanning out and doing a couple of book reviews, not necessarily endorsing the books, because we try to play this kind of devil advocate, but maybe in some ways summarising these kind of things. And I think over time we'll get deeper into some of those nitty gritty of those things. But you can't, especially now, trust everything you see online or on TV.
Couldn't agree. Well, this podcast, Simon, is about helping people to think for themselves and giving people the tools and enabling people to go out there and see what's really going on. It's so important that people do that right now, and that we escape a little bit the kind of hypnotic narrative, the vibe, and we just start to look at what do we really want and where do we really want things to go, rather than just kind of be caught up in this kind of race to somewhere that we don't know what the end result is.
Yeah, I had a friend that used to say one of his albums actually was called Never Trust a Hippie, and I think on the basis of that we'll say Never Trust the Vibe. I think we'll probably try and leave it there, unless there's anything else you want to say. But I think that's all good, and I'll see you on the next episode. Guys, as always, please tune in, like, subscribe. It does help the channel grow. Please comment. And as we said, we want to sort of delve more into this, and we're going to try and end maybe some of these seasons with some interviews as well. So thanks very much for watching, and thanks very much for your support.